Hello and welcome to AI Market News by LM. Wow, the markets were really walking a tightrope this week, weren't they? Caught between the fear of a massive new war in the Middle East and these sudden whispers of a peace deal. Today, we're diving deep into the 15-point plan that just sent absolute shockwaves through the financial world. This is the question, right? Is it over? It's the one question that sent the markets into a total tailspin, only to have them rocket right back up in a dizzying reversal that pretty much gave everyone whiplash. All right, so let's get into the numbers. We'll start with how things looked at the closing bell, which was basically a sea of red across the board. Before any of the late-night news broke, the mood was incredibly tense. The consensus was clear: sell now, figure out the rest later. So before all this talk of peace popped up, the market was bracing itself for a long, messy conflict. Everyone was running for cover, trying to shield their portfolios from what looked like a really bad situation getting worse by the minute. The mood was, to put it lightly, grim. Now the big, scary monster in the room here was the fear of a classic stagflationary shock. Think about it this way. It's like your car's engine is sputtering and about to stall out. That's the slow growth. But at the exact same time, the price of gas is shooting through the roof. That's inflation. It is the absolute worst-case scenario for the economy. And look, this wasn't just a gut feeling. The charts themselves were screaming danger. The S&P 500 broke below its 200-day moving average, and for traders, that is a huge red flag. It's a major trend line, and when you break below it, it's like a ship taking on water. It signals a serious loss of confidence. And then, bam! Out of nowhere, in the after-hours trading session, a series of headlines hit that completely flipped the script. Just when everyone was bracing for impact, this potential path to peace just appeared on the horizon. The first real sign that things might be changing came straight from the White House. These comments from President Trump, suggesting Iran was eager to talk, were the little spark that lit a huge fire of buying in after hours. And then the details started to trickle out, and wow, we're talking about a full 15-point plan being on the table, a possible one-month ceasefire, and even Pakistan stepping in to mediate. This was exactly the kind of news traders had been praying for.
But here's the catch. While the headlines were all about diplomacy, the reality on the ground was still a powder keg. This quote really gets to the heart of the problem. You have talk of peace, but at the same time, Iran still controls the world's most important oil choke point, and Israel is saying its military operations are continuing full steam ahead.
So what we've got here are two completely different stories playing out at the exact same time. On one hand, you have the headlines screaming hope and peace, and on the other, you have the cold, hard reality of more troops being deployed and ongoing military strikes. The market is basically walking a tightrope between these two narratives.
All right, so how did this tug-of-war actually hit the markets? Well, it caused some serious whiplash pretty much everywhere. Stocks, oil, currencies, you name it.
Just look at the stock futures. It's incredible. The losses from the entire day? Gone. Poof! In just a matter of minutes as those peace headlines started crossing the wires. Talk about a complete U-turn in sentiment.
And of course, we have to talk about the main event, oil. WTI crude just took a nosedive, dropping more than 3.5%. That extra price that was baked in because of war fears, it just started to melt away as traders began betting on de-escalation.
Over in the currency world, it was a classic risk-on party. The one to watch is the US dollar versus the Japanese yen. The yen is what everyone buys when they're scared. So seeing it fall against the dollar tells us that traders were feeling brave again, moving money out of safety and into things with a little more risk.
Okay, so clearly the market had a huge, almost knee-jerk reaction to the peace news. But what's really going on underneath the surface? Let's zoom out a bit and check the overall mood and the policy backdrop, which is absolutely critical.
And this is where it gets super interesting. Even with that massive jump in prices, the fear and greed index was still flashing a lot of, well, fear. We're seeing fear and even extreme fear in a bunch of key spots. It kind of makes you wonder if this whole rally is maybe a little fragile, you know?
And that nervousness isn't just coming from traders. It's being echoed by the big boss of the economy, the US Federal Reserve. And believe me, they are watching the inflation risk from all this like a hawk.
Yeah, recent comments from the Fed have made it absolutely crystal clear they're not coming to the rescue. Fed Governor Barr pretty much said, hey, we've got this new risk to deal with, so don't even think about rate cuts for a while. Their hands are tied because of that inflation threat.
And the market is definitely getting the message. The CME Fed Watch tool shows traders are betting with almost 94% certainty that the Fed's going to do absolutely nothing at their next meeting. The chance of a rate cut, zero. Zilch. Nada. The market gets it. So let's recap. We've got a geopolitical mess, a jumpy market, and a Fed that's stuck on the sidelines. So what do we watch now? Well, we watch the data. Let's see what's on the economic calendar for this week.
All right, looking at the calendar from investing.com, the big ones are the PMI numbers coming out of both the US and Europe. Think of these as a real-time health check on the economy. They're going to give us our first real clue about whether all this chaos and the high energy prices are actually starting to hurt businesses.
And that really brings us to the ultimate question, doesn't it? Are we actually seeing a real path to peace here? Or is this just the calm before another storm hits? We don't know yet. But one thing is for sure, it is going to be a wild few days ahead.
This video is automatically generated by NotebookLM, an AI-powered tool. The reference sources used in this summary are listed in the video description. As this content is AI-generated, there may be errors in proper names, pronunciation, or unnatural speech. This video does not provide investment or trading advice. Please make investment decisions at your own discretion.
Thanks for watching. Don't forget to like and subscribe.